Hello, everybody, and welcome back to another live trade analysis video. So, in this video, I will be covering my next few trades where I analyze them, where I went wrong, where I went right, and what could have possibly be done to improvise that trade. So, until this trade, I'm pretty sure I've covered in the last video. So, we will be covering the next few trades, which is this and this one, right? So we have two trades to cover in this video. I will come one by one and help you understand where I went wrong, where I went right, what would have been done in order to convert these losses into profit, convert this loss into profit, and how to have maximized that profit rate. So if you can see, um, in this place, in this scenario, why I was planning a bullish trade, because the last 2 days it was a very big bullish trend, right? So I planned to buy here, but SL hit and rallied. Then here we saw the invite setup being formed, 1 2 3 4 5. Then we could have entered in this bullish candle. You could have entered in this bullish candle with this stop loss and a big target, but I was not taking this trade because my two stop losses had gone, so I was done for the day. Then again we saw another invite setup at the resistance at this point, so the trend was clearly bullish, and here we took the bullish trade because it was inviting, and after the breakdown it was halting, right? So yeah, so the next so the view was ideally bullish, so where could you have entered is the biggest question. So if you can see, there are two trades which you could have captured here. One is the short trade, so you can have two mindsets. That is, one, it has rallied for so long, so correction is pending. Then, or trend is bullish, so go along with the trend. So for both scenarios, there are trades where, see, this is a high mark, right? So it broke out. Okay, the market broke out and halted. What does halt mean? Invitation. So you could have either shorted here at the crossing of the halt range, with a very small stop loss of 27 pips, and captured till the support at least, right? So that this basically is a resistance to support trade, right? If not, at this point, you could have at least captured it here, this crossing with this stop loss, same 27 pips, until support, which is 86 pips. So here you get 1:3, and this is the very top that was made, so you could have captured a bigger trend, right? But it did not make sense to hold the trade beyond this point because it was an M pattern formation. Okay, neckline breakdown, straight break, which means all the FOMO sellers are in the trade right now. So FOMO sellers are in the trade, so you get a retest, again sellers come in, retest, again sellers come in, retest, again sellers come in, retest, again sellers come in. So everywhere you have sellers. One M pattern breakdown, one retest, two retest, three retest, four retest. So all the seller stop losses are here, 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 or even here, because this is the M patterns top, the double top stop. So most of the stop losses are above this point. So market will definitely go to hunt these stop losses if before continuing on the upside or reversing and taking a downside move. So I was pretty much bullish on this, but the mistake I made here again was my early entry. On Monday, I did the same mistake. I entered early even before the zone was crossed. I entered midway. It gave me a few pips profit, hit my stop loss, and again went sideways. And then one good breakout, which covered all, which just kept on rallying, rallying, rallying. In place of where I could have captured the whole trend, it closed at 2715. I captured it. I started capturing it at 2626, 2627. Just imagine how much, uh, it could have gone if I'd held. But alas, my trade was closed here. Why? Because of that one silly mistake of entering before my level was crossed. If you see, after this level had crossed, it was never retested again. It was constantly rallying, rallying, rallying all the way until the moon. Right? So this is one. And my second trade. So, if we do an analysis of the trades, we could have entered here also in white setup, right? 1, 2, 3. With this stop loss, and you could have expected once the 2, right? Good, because it is always going to a high and you don't really know where you should book your profit, right? Then again, in white setup, breakout, very good trade. When you've got at least 115 pips. This was just rallying, and this is a major zone. This is a major zone on the higher time frame, right? If you do an analysis, then this is also a trade. Then here, I had taken a trade with this concept. I had seen this yesterday, and I had taken the trade on that basis. I will tell you what happened. It was a very unfortunate incident again, but yeah, I'm going into the 5-minute time frame. What I see is breakout failure, couldn't rally, right? Again spiked, breakout failure, couldn't rally, and what it did was halt at this resistance again in white setup, right? So breakout failure. When does a breakout fail? It fails because it needs that liquidity from the retailers to go on the opposite side, right? But in this case, the breakout had taken place and it also failed by coming back into the same zone. But in place of where it should have rallied like this by hitting all the buyer stop losses, it chose to stay in the very same position. You get my point? It is staying in the very same position, and so it becomes a thing of concern if it is a real break failure or not. So imagine, just keep it in your mind that a breakout failure should move as fast as possible. It will not invite you saying it's a breakout failure, come sell, come sell, come sell, or come buy, whatever. Right? It failed, halted, invited. So I marked this level properly and I entered on the crossing of this level with this as my stop loss. And my target was first here 2609 because 2700 was a round number. So 2609 was my target, and looking at the pace at which it went up, I was thinking that the trend is strong, so let us hold until the liquidity zone here. So I changed my target to 2702 and started trailing closely. First trailing was here, second trailing was here, and third time I trailed here and the stop loss was hit and it rallied the very next candle. So this was an unfortunate incident. If I had placed my target at 2699, then probably I would have been out of the trade with 95 pips. But I was expecting 2702. I was expecting 120 pips, but I ended up securing 4.6 pips. I mean 46 pips, my bad. So yeah, that was the learning part. And so how could I have maximized this trade? So there's a small thumb rule that I created after so many trailing stop losses hit and rallies, that whenever you are trying to capture a trade more than 100 pips, right? If you're trading at a 0.01 lot, it becomes $10. If you're having a target of more than 100 pips, in such cases you are supposed to trail on the basis of 15-minute time frame and not the 5-minute time frame. That is a big mistake that I did. And if I had trailed on the basis of 15-minute, my trailing stop loss would have been here, or worst case on the change of character and the fair value gap marked, right? So so here the breakout structure has taken place, right? Higher has been formed, and so this can be marked as a point of reversal. So I could have placed my stop loss at this point, just below this level. In such cases, I would have got a bigger trade than just my target. It went all the way until 2710, which is again a round number which I was talking about. 2710 was the high made. If you look at this candle, look at the high made, which is 2709.98. So yeah, that is what it is all about. You have to manage your trade, and when you so let me summarize. One, from my mistakes, what I've learned: one, do not enter before your level crosses. Two, if you're capturing a trade more than 100 pips on the 100 pips as the target, trade on the basis of the 15-minute time frame and not the 5-minute. Then re-entry is a boon. In this case, if I had re-entered on the crossing of this level, I would have got a big trade. As I said, the stop losses were available until here, so this was an easy trade for here, right? But I missed it. So re-entry is a boon. Then for stick to one setup, it'll give you the best. For me, the setups are invite setup and halt reversal setup, which are basically the same concepts of liquidity grab and stop loss hunting, right? So stick to one concept, stick to one setup, and you will be profitable in a fair amount of time. So I cannot say in a very short time, because it takes time to learn and grow. I've been in the market for 4 months, 5 months right now, and I'm not profitable as yet. It's just fluctuating up and down. It's just fluctuating up and down. So I cannot say that I'm profitable, nor can I say that you will be profitable in a short while. It will take time. It will take time. So while talking, another setup that has been formed is C. So my bad. Wait, hold on. Invite resistance, breakout, halt, failure. I mean, breakout failure. Breakout failure. What should be the reaction? It should rally ASAP. But what did it do? It chose to halt here. So you could have taken this trade at the crossing again, but this would not, you could not have closed the trade because the market was closing. So yeah, that is all for the video. A profitable journey and happy learning over the weekend.